Ever wondered how to transfer money from a foreign country to buy property in the United States? Well, it's not as daunting as it may seem, but there are some key aspects you need to understand. First, let's talk about financial regulations. Anti-money laundering, or AML laws, exist to prevent illegal activities like money laundering. It's crucial to be aware of these laws to avoid any legal pitfalls. Then there's the Know Your Customer, or KYC requirements. Financial institutions will require extensive information about the source of your funds and the parties involved in your transaction. Now you might be wondering, where do I keep my money? Well, opening a US bank account is a good start. You'll need to select a reputable bank, many of which offer specific accounts for non-residents. Understanding these laws, regulations, and processes is paramount. Getting familiar with these laws and regulations is the first step in this journey. So let's continue on this path together. Now that you've got the basics down, it's time to talk about declaring your funds. In the United States, there are certain reporting requirements for moving large sums of money across borders. Any cash transactions over $10,000 must be reported to the Financial Crimes Enforcement Network, also known as FinCEN. This is a crucial step in ensuring compliance with anti-money laundering laws. When it comes to transferring your funds, there are a couple of methods you can consider. A popular choice is bank wire transfer. This method is secure and ideal for transferring large amounts. However, you'll need to provide all necessary details, including the recipient bank's SWIFT BACE code and your account information. Another option is online payment services. While convenient, be cautious of their fees and exchange rates, as these can eat into your funds. Choosing the right transfer method is crucial to ensure a smooth transaction. Currency exchange and tax implications are two more aspects you need to consider. When transferring a large sum of money internationally, it's important to use a reliable foreign exchange service. These services can offer favorable exchange rates, especially crucial when dealing with large transactions. Now let's talk about taxes. It's vital to be aware of the tax obligations associated with your transfer. This is where a tax professional can be of great help to ensure you're in compliance with U.S. tax laws. For non-U.S. citizens, the Foreign Investment in Real Property Tax Act, also known as FIRPTA, comes into play. This law requires a withholding tax on the sale of U.S. real property interests. Essentially, a portion of the proceeds from the sale is withheld as tax, and it's important to factor this into your financial planning. Being aware of your tax obligations can save you from unexpected surprises down the line. You've made it this far, but there are still a few more steps to take before you can buy that dream property. One of those steps is documenting the transaction meticulously. It's vital to maintain detailed records, including bank statements, wire transfer receipts, and any correspondence related to the transfer. This documentation serves as proof of the transaction's legality, and can be invaluable if any questions arise in the future. But as you navigate this complex process, remember that you don't have to go it alone. It's highly beneficial to seek legal advice from an attorney who specializes in international real estate transactions. They can guide you through the legal requirements and potential challenges, ensuring you don't inadvertently break any laws. Similarly, consulting a financial advisor can help you understand the financial implications of the transaction and ensure compliance with tax laws. They can offer insights tailored specifically to your situation, helping you make the best decisions possible. Getting the right advice can make the difference between a smooth transaction and a stressful one. Finally, you're ready to close the deal on your new property. This is where the title company comes into play. They are the crucial link in the chain of buying a property in the U.S., ensuring the title to a piece of real estate is legitimate, and then transferring that title from the seller to the buyer. It's their duty to provide guidance on the funds needed for closing, so it's important to work closely with them. However, don't forget, it's not just about the title company. The importance of seeking professional advice cannot be overstated. Whether it's a real estate attorney, a tax professional, or a financial advisor, these experts play a vital role in ensuring a smooth and legally compliant money transfer for purchasing property. They can guide you through legal requirements, potential challenges, and financial implications. Remember, regulations and processes can vary, so it's crucial to seek professional advice specific to your situation. Here's to successful property ownership in the United States.